Samir, afternoon. Thank you so much for your time. We saw, very good, high quality NBFCs have posted very good numbers in the last few quarters, and that's how they shot to limelight and performed very well. Now in a corrective phase, of course, along with the market. But I want to understand with you, what phase of the NBFC cycle are we in? Because some of them, some on the street are questioning it, saying that, we are kind of, the cycle has played out and now bad loans could surge. Others are saying that technology has come to rescue and these days this is the early part of the cycle and delinquencies may not happen to that extent the way we saw last time because of high quality role of analytics and technology. So what's your sense right now?
Yeah, hi. We think that the initial gains, wherein largely every player of the sector saw an up move with respect to improvement in asset quality, that is probably behind us. But are we in a phase that we should see meaningful increase in delinquencies? Probably not. We will probably be of the view that in some pockets, maybe there is some overheating. We gather, especially unsecured loans below 50,000 rupees of ticket size are seeing some minor inch up in stress. But is it going to drive meaningful change in any of the frontline names that we like? We are not of the view, though we are watching this space closely. And with respect to technology, our view is that a lot of players have invested on that front. So to that extent, availability of data is better. I think depending on what segment each player targets, that is how the incremental outcomes will be. But clearly, to answer your question, are we going to see a meaningful increase in delinquencies right away? We are not of that view.
I was looking at your top picks. If you could talk to us about some of the names which you are most bullish on right now, 2 or 3 of them, where the quality of management is very strong, technology is coming to the aid, good growth visibility, and valuations are also not very stretched.
Yeah, so I think we've been positive on a few names and some of the names which we have liked for a long time, one of them being Bajaj Finance. We continue to like that play despite seemingly higher valuations, because we think it's a fantastic franchise and the superior return ratios warrant premium valuations. Among other names, we continue to like 5-star emerging SME play and small ticket lending. We have been positive on space, which is microfinance. So Fusion remains our top pick in that space. And a new name, which is basically Poonawalla Fincorp, a turnaround story wherein the entire Magma asset mix was changed and it is more urban in nature, more catering to the organized sector, focused on digital lending and in a completely revamped business model with respect to capital adequacy, with respect to ability to raise liabilities, and also the target segment that they are focusing. So these are some of the names that we like as a house, and we've been bullish on the same.
Poonawalla in particular, I just wanted to scratch a few more points. We've seen the stock coming under a bit of a corrective phase right now, but if you look at the last 2-3 quarters of numbers and the commentary from the management, that appears to be very strong. Do you think this is a good buying opportunity? And the way business model is evolving now, what's your thoughts there on Poonawalla?
Yeah, our fair value on Poonawalla Fincorp is roughly around 480 rupees. We think the kind of ROA profile that they are delivering, upwards of 4%, I think the ROEs are lower only because of high degree of capital on balance sheet. But we think as the model gains more acceptance with respect to how they are driving highly efficient lending, which will reflect in lower OPEX ratios going forward. At the same time, gains which probably they will accrue through the sale of the housing finance subsidiary will help in their margins. While I must say that they already have very strong margins, this will only add to it. We would actually advise this correction as an opportunity to add exposure to the name, given the strong capitalization levels, superior razor sharp execution, And obviously at this size, there is a meaningful runway to growth which is available over the next 3 to 4 years, I would say.
They've recently got a lot of cash from the sale of housing finance subsidiary, which they termed as growth capital. Now, there is one section of the market which believe that indeed this growth capital can help them accelerate and reach their FY25 goal which they have set. There is another pocket which says that they question the evolution of the business model, which you also referred to, the earlier Magma, now Poonawalla. What are your thoughts on that? Some people are still questioning the evolution of the business model. Others say the company is completely shaken the past and now forging ahead with new growth and new vigor.
Yeah, so we are of the view that of the old asset classes that the prior NBFC was catering to, it is only used car vehicles that is the product which is probably that they are doing even now. And even there, the target customer segment has changed. While other product categories, which is personal loans and LAP, I think even there, the customer category has totally changed. The origination model has changed. Underwriting is now more technology driven. The sectors with the geographical presence of where this business is being operated is totally different. So we would be of the view that it won't be right to directly compare it with the prior business. It is only that the discontinued portfolio continues to run down, and that will over the next 12 months in our view, will be a fully different asset mix, customer mix, as well as scale of operations.
All right, we'll let you go on that one, Samir. Thank you very much for your time today.